Thank you so much for staying with us. Now, marking a decisive pivot in the country's energy strategy, the Nigerian National Petroleum Company Limited has officially unveiled the Nigerian Gas Master Plan 2026, NGMP 2026, also known as Gas Master Plan 2.0, launched on the 30th of January 2026 in Abuja. The plan positions natural gas as the cornerstone of Nigeria's industrialization and energy security agenda. Building on the regional 2028 framework, the NGMP aligns closely with the Decade of Gas Initiative 2021 and the recent fiscal reforms under the Petroleum Industry Act, shifting the focus from policy intent to execution. The question now is whether this reset can move Nigeria's gas sector from ambition to delivery and finally unlock domestic demand infrastructure build-out and investor confidence at scale. But let's look at this and, of course, other developments in the industry. My guest is Dr. Chinan Dikwal. He is the Vice Chairman, Africa Energy Council. He joins me, from Doha. Thank you so much. Good afternoon, Doc. It's good to see you. Another gas master plan here. We had one in 2008. For me, I'm worried. What's the difference? What makes this stand out? And do you think that this can take us to where we should be with regards to gas development in Nigeria?
Thank you, Tolu. Thanks for having me. I really think you've diagnosed the issue here correctly. Last gas master plan was 2008. Now we have one in 2016. The logical question that many people will be asking is, well, hang on, what have you achieved from the last gas master plan of 2008? How does it differ to what we have today? I've done a bit of a comparison between the two. A lot of what we have in this plan, some of them were mentioned in the last. So the point here is about execution. We've not been able to, from 2008, fully execute some of those key things, and we're trying to re-represent them in this plan. Having said that, the plan on this one is very, very robust. If you looked at it, I've queried it, I've interrogated it, it's extremely robust and very well thought through, okay? And I think the fundamental distinction that people need to make about this is we have a presidential mandate. So I'm going into a plan right now. We have a presidential mandate, around a decade of gas that's being run from the ministry, and that's quite clear. But also the presidential mandate says that in 2027, Nigeria must produce 10 BCF of gas per day, 10 billion cubic feet of gas per day, 2027. By 2030, that needs to go from 10 to 12 billion cubic feet of gas. So, very clearly, our production needs to go up, and for production to go up, there has to be investment and infrastructure and all of it. So the reason why I'm saying this is we have a presidential mandate, which is very much about policy vision, policy direction. NNPC has now come out with this plan to put meat to that policy directive. So here it's meant to be a clear action plan with clear targets, clear things to do for us to achieve that mandate. And honestly, it's quite an elaborate document, certainly much more elaborate than the old one that we have. But fundamentally, I think the question remains. Nice and shiny document. How do we go into the specifics of actually functionalizing and making these things happen, these action plans, making them happen? I think these are the big questions in my mind. But without a doubt, great document. It talks about hub models, so it identifies 23 different gas hubs in Nigeria. So investment will not just be haphazard. It would be according to these hubs, these places where we're trying to develop massive gas hubs that can happen, X, Y, and Z. It talks about central processing facilities. Okay, we have some, yes, in the Delta, but here identify 7 critical central processing facilities that need to be, some of them already there, which need to be expanded, some of them new ones that need to come on stream and all of that. Then it talks again about, I mentioned there, the gas production. Currently today, so actually go back to 2024, our gas production per day was about 7 BCF per day. 2025 went to, I think, about 7.6 BCF per day. It's saying now in 2027 that we'll jump from 7.6 all the way to 10. Now, I've looked at some of them as well, some of the upstream positions. I've seen some of the gas fields. It's very possible, but I think execution discipline would need to be really tight to arrive us to that point. So it's a great document. It identifies some of the key industries, gas-based industries and all of that. But I honestly think, the real question for me, the fundamental question for me, yes, this is a document by NNPC, which is meant to be a clear document with clear action points and specifics. But what I would like to know is the governance of this document. Where would it sit? Where would it sit? Who's the responsible SBU within NNPC that would functionalize this document? Is it one SBU? Is it several? Who has total accountability for it? I know it sits overarchingly with Bio-Ojulari, of course, but what's the secretariat to make this happen? Some of those governance things are some of the most important things to make sure that at the end of the day, this succeeds.
Great stuff. Now, before I go to my next question, of course, staying with the oil and gas industry, I'm still worried, our gas reserves, proven and unproven reserves. We keep talking about how much of gas we have, even more than crude. But, when we talk about market-driven flexibility, pricing, and all of that, is also something of concern to me. Are we getting that right in this new policy, this new framework?
Yeah, certainly better than we did before. It's not perfect, but certainly much better. I think the point you're making there, Tolu, is this new thing that's come up, willing buyer, willing seller. And very similar wording to what we had in PIA, but it's also made itself here in this document, this sort of GMP. The whole concept of willing buyer, willing seller. So if somebody has gas, you have to sit down with who's going to buy the gas and strike a price and offer it go. Which I think is really much better than we had before, because the ones before were dominated by market instruments and interference from government and all of that, which was a bit. Now, to the first part of your question, Tulu, it's very exciting, right, that we have a huge amount of gas, about 210 PCF, 2P. Yeah, this is 2P. 2P means proven reserves. Proven reserves based on today's technology and everything, we can get that off the ground based on today's technology. Okay? So that these are 2P reserves, 210 TCF. The other point you made there is we have even more gas. These are 3P resources. 3P resources, I apologize. 3P being, these are possible resources. So 210, okay, but with an upside up to 600 TCF. So potentially Nigeria's gas can get up to 600 TCF, okay? But that needs to be de-risked. So part of this GMP, this gas master plan, also looks at that. How to look at some of these resources, the 3P resources that we have, and de-risk it to increase our proven gas resources, which I think is very, very exciting. But the reality of it is it's irrelevant how much resources you have under the ground. If the fiscal terms, the markets, the pricing structure, like you say, does not allow us to bring this gas, from the ground and take it to the market, it's useless. An example, case in point, is Venezuela. Venezuela has the largest proven oil reserves in the world. But when you talk about oil and gas today, when you say oil today, you talk about Saudi. So Venezuela has much larger potential, but Saudi has much larger production. And production always beats potential. What's in the ground is in the ground. What's outside, we can use. So, the point here, fundamental point is, how does Nigeria go from the point of simple potential to making sure that the fiscal terms for gas are attractive? And honestly, from what we saw with the gas incentive, tax incentive plan. We've seen some of those happening. So the fiscal terms need to work and incentives and all of that. The reserve size needs to work, not only for Nigeria. We don't have much problem, around that. Even, I'm saying this actually, one of the things we need to focus, so one of the things for Nigeria that we need to focus on, when we say we're producing 7 BCF of gas today, which is, let's say 7.6, is what we're producing today. Approximately 55% of that 7.6 BCF comes from associated gas. So basically what I'm trying to say there is it's actually oil that we're producing. But because you're producing oil, you have gas almost like byproduct, and then we just take the gas and we monetize it. So the initial intent of that development was not for gas, it was just for oil. The gas was simply a consequence. Non-associated, and this is which way it becomes very interesting. That's a completely different kettle of fish because the investment terms need to be different. It needs to work. You need to have a seller and an offtake. And all these things need to come together to make it very successful.
Okay, let's go to petrol pricing now because it's getting so interesting. We've seen that flip-flop again. We're back to 839 naira. In some cases, 840 naira. A week ago or 2 weeks ago, we're buying at about 730, 740 naira. We continue to see this flip-flop yes, in a deregulated market. But what more should we be looking at as we move on in 2026? Nigerians will still want to buy a fuel cheaper. What if the price of crude goes higher? Then we're going to pay higher.
No, without doubt, this market's deregulated. The price of crude goes higher, you can be sure you would see that at the pump. But I think that's not the most important thing. I think the most important thing here is we as Nigerians, isn't that just so exciting? Isn't it just so exciting that we are having a price war dominated by market forces? What I'm trying to say there is, Tony, if you think about it, you just mentioned it there. The ex-gantry price of Dangote refinery, okay, in December, they brought it down to about 6.99. So 6.99 naira per liter, meaning that the price at the pump, like you mentioned, about 739, 740 naira at the pump. Okay, very exciting. Flash petrol prices, Nigerians were buying it at much cheaper than we have done in a long time. In fact, I would say this: when price was 739, believe it or not, Tolu, some marketers at the pump price were selling it even less than 740. They were selling it around 735, 734. And the reason for that is because the market is now entirely deregulated. Everybody's trying to undercut the other marketers so that they can attract people to come in, okay, to come in and buy from them. And I think this is the joy of having a market that's entirely deregulated. Now, the other layer to think about, it will shock you. It actually shocked Nigerians to know. We're buying crude oil, we're buying petrol at 739, 740. But believe it or not, the landing price for imported crude into Nigeria is about 760. 760 naira, the landing cost of crude oil into Nigeria. But at that time, we were buying crude oil, we were buying petrol at 739. The point there, what I'm trying to say there is there's a price war that's ongoing that's benefiting Nigerians. If you import crude at 760 and you're selling it at 739, 740, you're losing money. But many people are having to do that because they're trying to protect their market share. They're selling at a loss for them to protect their market share. And I think this is the joy of having a local refinery in the territory that we are. It's something that we're not used to, but we're starting to see a massive price war. Of course, it affects other players like NNPCL and other marketers.
Yeah.
But the reality of it is, the average Nigerian, this is a huge, huge benefit.
Indeed, it's a big one for that. Let's look at Shell's confidence back in Nigeria. This been celebrated really, coming back to invest again in our country. What do you make of this investment move by Shell coming back to Nigeria? As doing so well, spending so much money. It seems something good is happening in that segment.
Absolutely, absolutely. I'll take you 10 years ago. Even probably less than that. Many people said the Niger Delta Basin is too many security problems, too much theft. Belly is going, everybody's leaving. That was the narrative. Today, given what we saw since, can we say, end of 2022, maybe into 2023, we had huge new executive order signed by the president, which made it really attractive. We had, the tax efficiency one. We had the local content one that also came. We had the ones for non-associated gas and all of these things turned the basin that people said was dead to something that became super attractive. And what have we seen in that time? We've seen Shell take FID on Bonga North in 2024, $10 billion. $10 billion of capex coming, Bonga North 2024. We saw in 2025 them take FID on a non-associated gas field, something we have not seen in a long time. A-type field, $2 billion of FID on non-associated gas, Shell again. We saw them last week. We saw Wael Sawan, CEO of Shell in Abuja, talking about potential FID on Bonga Southwest. Bonga Southwest, total capex $10 billion. If you put operating costs, $20 billion. Huge capital that's flowing in. Now, to your point, I'm saying here that yes, Shell left before. Shell is coming back, in a very strong way, but they're coming back in a different way. We have to be clear about that. In the past, Shell was the king of onshore. Most of the legendary fields that we had in Nigeria, OML 30, and all of that, many of the large oil mills that we had in Nigeria were dominated by Shell. Today, they've left all of the onshore fields and have moved deeper offshore. Most of the investments we're seeing are deep offshore, and they're taking advantage of the new fiscal terms that the president has put down. And it's super exciting. It's not just Shell. Many others are coming back. We've seen the same as well. Total, Total take other new positions as well. Shell even increases, I think, increases stake in OML 118. I think so. In OML 118 increases stake from I think about 55 to 62.5%. So it's a very exciting period. Upstream is certainly seeing a lot of growth and movement. And same downstream. We're just speaking about Dangote and what's happening there. So it's a very exciting time, certainly in Nigeria's energy industry.
Well, let's wrap it up with expectations on the market. Looking at the crude oil space, what is happening? You mentioned Venezuela. What is happening there? The U.S. is taking over production and all, according to President Donald Trump. But what do you see in the crude market as we move on? I always remember that our budget is predicated on the price of crude. We still need the money, the crude dollars, the oil dollars. We need it to move our country. Even if we want to diversify, we need that dollar to diversify our economy.
100% true. Venezuela is more of a long-term play. The US has taken it over, no question about it. And those will not come into the market anytime soon because of the huge amount of decay and underinvestment. But what to look out for here is this. Today, as we're talking, we are in an oversupplied market. The crude oil market is already oversupplied. There's huge barrels of so supply exceeds demand in today's market. And the reason for that is, you can see that very clearly. OPEC has been holding back. They have given us a clear signal that the additional barrels will not come onto the market all the way until April of this year. And it sort of makes sense. And so you and I have spoken about this as well. But traditionally, Q4, particularly December, is one of the strongest months in the year for petrol and demand for petroleum prices. January and Q1 is normally the weakest month in the year. So yes, right now demand is low because of the cyclical nature of everything, and supply is high. But I think as we go into the summer months, we should start to see things pick up. I just saw the revision by IEA. The IEA just put out their own position as well. They've been forecasting demand in the second quarter of the year to increase a bit more substantially. So from a price standpoint, I think, it would be very safe to look at or hedge prices around $60 per barrel for this year. I think anything above that, for this year, I'd be very, very surprised, just given market dynamics and what we see in the market today.
Dr. Chinandi Kwalamos, thank you so much for your time. Vice Chair, African Energy Council. It's really good to have you join the show.
Thank you, Prince.
Enjoy the rest of your day.